Okay, so the question is we've structured a creative finance deal with a seller on a free and clear property. How do we set up payments to the seller monthly? Do we pay by check or use Venmo, or is there a third party that needs to be involved? Well, if you've structured a seller finance sale with someone who has a free and clear property, you're going to have a closing just like any other closing you would do. You're going to close that thing with an attorney. They're going to draft the mortgage and the note for you. That's going to be recorded at the courthouse. You'll set up your payment structure, your agreed upon interest rate, if there is an interest rate, the amortization of the loan, all the typical terms. Now, how you'll actually pay them? Well, I would ask the seller, what do you want, Mr. Seller? Do you want a check? Do you want an auto pay, bank draft? Just make it simple. Just ask the seller what they want. What I find is the older the seller is, the more traditional they want to be. They're not as up to date on the apps like Venmo or Zelle or PayPal and that sort of thing. So a lot of those guys just want to check. And that's really easy to set up with your bank account. You can just set it up as bill pay, what day of the month that you want it to go out, and they'll actually just draft that from your account and actually mail the seller a physical check. So that'd be my recommendation to do it. But just ask the seller. It doesn't really make any difference. We've been in Airbnbs for the last year, and most of the time we just pay with Venmo. It's just easy to do, and that's the way that we do it. But ask the seller, and they'll tell you how they want to be paid. Hey guys, thanks for watching. While you're here, don't forget to hit the subscribe button and check out these other great videos and podcast episodes.